Hello everyone, I'm Marty Pospisil and welcome to my July 2024 real estate market update. I've got lots of stats to show you guys today. And without further ado, let's jump right into it. So, firstly, my July 2024 highlights. If we look at our activity, sales activity year to year for detached houses, our activity is actually down now, just over 18% on houses. The benchmark price, however, we're still up 3.7% year over year from this time last year. As of last month, housing prices actually took their first dip for this year, down 0.1%, more or less the same pricing for detached houses. I'll explain why that's happening shortly. Attached townhomes and duplexes, activity is down 16.6%, so massive drops in activity year over year. However, the benchmark price for townhomes and half duplexes is up 3%. And the price month over month down 0.6%, so a slight drop in that product category. If we look at condos, condo activity down 20.9%, also massive drop in activity from this time last year. Prices are still up about 1% over last year, and last month we had almost a 0.5% drop in condo prices. Okay, so summer price drops, modest price drops. We're seeing a very, very unique buyer opportunity window for people taking advantage of the current market on where it's at. So let's look at specific product and where it is busy and where it isn't. And the metric that I like to use is called the sales ratio. And as my avid subscribers already know, the sales ratio is basically the absorption rate of product that's selling every month. So if less than 11% of a specific product in a specific area is selling, we're in a buyer's market, there's downward pressure on pricing. If more than 21% is selling in a given month, it is a seller's market. There's upward pressure on prices, multiple offers, bidding wars, etc. If it's between 12 and 20%, we're in a balanced market. It's not favoring the buyers or the sellers. So let's look at our different areas. Let's look at detached houses. Vancouver West Side. We saw what happened last year. Since the beginning of this year, we went from a balanced market all the way through from January to June. Right now, surprise, surprise, we are still in a balanced market at 13%. So it's actually towards the bottom of that balanced market range for detached houses. So no real change in activity there, and houses slightly down if you were going to get exact. Condos, townhomes, Vancouver West Side. You can see from the beginning of the year, we were in high balanced. It went all the way up to a very active seller's market during the mid-spring time period, and then it started to cool down, but still last month in a seller's market, this month for July, we are right at that cusp of the bottom of the seller's market at 21%. So still quite busy for condos, townhomes, Vancouver West Side. Let's jump into downtown. Condos, townhomes. Throughout the year, we were balanced, almost hit a seller's market in April, then went down to mid-balance. This last month for July, we're at 14%. So we're still in a balanced market for townhomes and condos in the downtown neighborhood. Over on the east side, let's look at some houses. We can see from the beginning of the year, we were balanced, got busier and busier, jumped into a seller's market in April, got very active in May for houses on the east side. I remember that. June, it dropped back down into the top part of a balanced market for July. Surprise, surprise, we are a little bit slower at 13%. So we went from a high of 24% down to 13% sales ratio degree of activity for detached houses on the east side. So balanced market. So condos, townhomes on the east side of Vancouver. We've had an active market, a seller's market throughout the year, ranging from 21 to a consistent 28% over the last 4 months throughout spring. And this month we are slightly down at 24%, but still a seller's market for condos, townhomes, Vancouver East Side. Okay, if we look overall in the West Side, you can see the sales ratios are all in that balanced market territory for condos, townhomes, and detached. And if we're looking at the East Side, you can see we still got some of that condo product into the seller's market, but predominantly in the mid to upper range of the balanced market for the east side of Vancouver. If we look at all of BC, you can see that the active sales ratio here in some areas on Vancouver Island, very busy. North Vancouver also in a seller's market. Lower Mainland just dipping in below into that balanced market category. Market conditions across BC, again, if we're looking at BC in general, we are in that balanced market territory. Remember back in 2021, that climb to 2022, look at where we were. We were over 60% in the sales ratio. Now we're hovering around 15-16% on average throughout BC. Interesting. What's happening in the burbs? Now, no surprise here. In the burbs, in the entire Lower Mainland, for detached product, we can see all red throughout the entire suburbs, apart from New Westminster, Pitt Meadows, and Tsawwassen, meaning they've had a slowing of activity. For houses, it's pretty well consistent across the Lower Mainland. If we look at attached product across the Lower Mainland, consistently red lower activity, apart from North Vancouver, Port Moody, Cloverdale, and Langley saw an uptick in activity. Those will probably taper off in the next month as well. So what's happening with prices? The big question I always get asked. If we look across BC, you can see there's that peak back in 2022 of pricing across BC. We had that dip last year with inflation and the rates going up. Then we had a recovery into fall, and we're up and down a bit like a sawtooth, but we are nowhere near in BC the average price where we peaked out in 2022. That's a different story when we look at Greater Vancouver. If you look at Greater Vancouver average prices for houses, you can see if we draw a horizontal line, I drew a little yellow line in there, you can see we are actually at our peak pricing today for detached houses in Greater Vancouver since the beginning of time in 1977. That's when time began, by the way. And on townhouses, you can see if we draw that horizontal line, we're almost at the same level we were in 2022, and in condos, almost the same as well. For Greater Vancouver has fared better in that recovery from our peak. So we are back there in Greater Vancouver. If we look at average price per region, we can see we're all over the place. I don't know what's going on in the Kootenays. We just drove through the Kootenays, and it's absolutely beautiful. That Yellowhead Highway, fantastic. We were up through Jasper and Banff and Radium Hot Springs. What a beautiful province we live in. Gotta say, maybe that's part of it. People are discovering that and going up there. Okanagan has a slight dip. Vancouver Island is up. North Vancouver, slight dip. And Lower Mainland, a bit up in activity for average price. So if we go to the 5-year trend, this is what I like to look at. You can see that peak back in 2022. We've got townhomes, houses, and condos. But if you draw that horizontal line just on houses for Greater Vancouver on the 5-year trend, we are at that peak pricing that we were at in 2022. If you do the same for townhomes and condos, you'll find the same thing. So, in a nutshell, Greater Vancouver doing better in prices and hitting the peak price ever compared to the rest of BC. All right, so forecasting for this year, let's see where we're at. So our market drivers, we've got the deterrents in red, the enhancers in green, and transitioning in orange. Consumer confidence is transitioning again. We had really high green consumer confidence in March, April, and May. That started to taper off. Buyers have cooled their jets, and they're waiting for the interest rates to drop. That's not happening. We'll talk about why that isn't happening. Inflation in the economy. Inflation is holding relatively stable. There's a couple of small changes here in the US, but no big changes in inflation. And the cost of borrowing, we're all waiting for those rates to drop. Right now, the best 5 years around 4.69%, preferred rate, slightly lower than where we were, but nothing that what we're expecting to get to. We'd like to get between 2 and 3% again if we ever do. Inventory levels are growing, but they're slow. So there's a lot of orange in here. There's a lot of transitioning. There's no clear direction where we're going. So we're kind of hovering through summer in that transitionary sort of mode. Consumer confidence, there's the consumer thinking, should I, shouldn't I? And they're kind of sitting there waiting, not really doing too much. They're not listing their homes. They're not buying their new homes. They're waiting for those rates to drop. So we're seeing these modest declines in price, and we're seeing about the same activity as we normally would, no increases that we'd like to see. Now, this is part of what's happening, the unemployment rate. Now, interestingly, unemployment in BC fell. We're at 5.2%. But look what's happening federally throughout Canada. It's up and it's climbing. That's not a good sign. That's not what Tiff Macklem, the Bank of Canada, wants to see, or our government, and that's making them a little nervous about keeping the interest rates high where they are, because we're starting to see unemployment increase. That's not a really good indicator of where our economy is going. That might force them to bring some drops in. But again, they're hesitating bringing the drops in because that can spur more consumers to go out there and buy. And then, of course, that brings up inflation again. So it's all tied together. So let's look at rental rates. I find Vancouver the most interesting. Look at the one bedrooms where they were at the end of last year. We're at 160 points, the rental rates there, and now we're down to about 140. So we're looking at about a 10% drop in the one bedroom rental rates. And if we look at the two bedrooms, this dotted line, similar. We saw those crazy rental prices at the end of last year. And now they're starting to come down, and a little bit of an adjustment up. So all the programs that the government's coming out to, allowing rentals in all buildings, etc., those are helping increase the rental stock. Banning the Airbnbs, whether you agree with it or not, that's increasing the long-term rental stock as well. So it did have an effect, a positive effect on rental rates. Consumer confidence, buyer demand, when we're talking about construction, look at in terms of BC in general, all the units under construction has increased since 2022. There's a lot under construction, and there's the moderate number being finished, and of course the starts are slightly up. So that shows a little bit of an indicator of where we're going. If we look at Vancouver, housing starts. These are the developers making that investment in property and actually getting the permits and starting new homes in 2023, slightly less than where we are in 2024. It's down in Victoria, it's down in Kelowna, it's a little bit up in Abbotsford and Nanaimo. So no big changes in the housing starts. That shows that they're also hesitating as well. Inflation, there's our friend with the Bank of Canada, is at 2.9%. Very good. They want to keep it between 2 and 3. That's exactly where we're at. We're expecting it to lower, but it actually jumped up slightly. And borrowers are hoping for the drops to come. That will bring lower mortgage rates, but we might have to wait a little bit longer for that. So if we look at the consumer price index, you can see it has dropped down to where we want it to be, then it jumped up. We got a bit of a sawtooth up and down going on here for the consumer price index. And part of that is a quarter of the headline consumer price index is housing. So when house prices, when people start investing and buying homes, that starts to affect the inflation rate. So it's all tied together there. And we're in sync with our neighbors. If we're talking about where we were at 2.7%, we've jumped up slightly to 2.9, so that's bad. It's gone up slightly. Whereas the US was 3.36, and now they're down at 3.27. So their inflation rate has actually dropped. So that's a good sign. Cost of borrowing. Now, mortgage rates will begin a slow decline now through to the end of 2024, but it's not as fast as we were predicting earlier in the year. We were hoping to have some major drops take place over the summer. Not happening, and it's happening for all the reasons I just talked about. There's all sorts of other factors that are being incorporated into the Bank of Canada's decision to drop very conservatively. So don't expect any sharp increases, any sharp drops to come anytime soon. So if we look at the forecasting now, and again, this can change where we are now. If we're looking at the variable rate at 5.85 and the posted 5-year rate at 4.9, that 5-year rate's looking pretty consistent right into next year, whereas the variable rate may fall. This is not what we were looking at 6 months ago. We were hoping for that to really start to drop down. So that's a disappointing forecast to see. Now, if this is kind of a new graphic I brought in, there's our Pospisil Realty cat, cool cat, holding his hundreds up in the air. Love that graphic. What is the buying power for today's cats? So we do a quick calculation when I'm out with buyers looking at property. I'll base a lot of my quick calculations based on, that should actually say $100,000, not 1,000,00. So to borrow $100,000 at today's 4.9% rate with a 25-year amortization and monthly payments, it would cost you $579. So we say for every $100,000 borrowed, it's going to cost you $580. So that's an interesting calculation. And of course, if we look at that forecasting for the 5-year rates, it's looking pretty consistent. So you can probably use this number over the next 6 to 8 months for your buying power on mortgage rates where they're at today. So if you're buying $1 million home, it's roughly $5,800 a month to pay the mortgage payments for that. So that's the today's cat buying power graphic. And inventory levels. Houses, west side, we're looking at some slight increases. Again, look at how gradual this curve is. Not a big increase in inventory throughout the west side for houses, and the same for townhomes and condos. We had a bit of a jump in March. People were excited about the market, then it leveled off again. Only 21 new listings over the last month for the whole west side for condos and townhomes. Jump into the east side for houses, same story. We had a jump in March, April, but again, it's leveled off to a very low increase in inventory, and that's the same with condos and townhomes on the east side. We actually had a slight drop, 644 units for sale down to 640. So across the province in BC, we're seeing inventory go up. And in fact, when we drove through the Okanagan just a couple of days ago, we saw a lot of properties on the market for sale. Now, that might be related to the big cold snap they had and the loss of all the stone fruit, the vast majority of it. A lot of the farmers are being hit very hard there. So climate change is definitely a major factor now in real estate values throughout the world and in areas like the Okanagan that we're seeing now. So active listings across the province are increasing. So active listings, you can see in the different areas around the province, all increasing, even in the lower mainland. Maybe not as steep as we'd like to see, but they are going up. So what's next for pricing? If we look at the forecast from BC Real Estate Association, we can see for 2024, we're expecting a little bit better year than last year. And for next year, we're expected to see an increase in activity as well in terms of number of home sales across the province. So in conclusion, we are really directly impacted by the mortgage rates, and everybody's waiting for those to come down. And of course, the inventory, they're tied together because people aren't listing their homes until they see a lot of options for them to buy, and they may not want to break their existing mortgage and renegotiate at the current higher rates. They were hoping that they'd be lower now, so there's a bit of a status quo. People are waiting for those changes to take place before they jump into the market. So that is impacting the confidence and the demand out there. But the inflation's in the target range. That's a check mark. The Bank of Canada will start to drop the rates through the summer, maybe not as fast as we'd like, but they will, especially when we're starting to see that federal unemployment rate increase like it is, because they don't like to see that. Listing inventory will continue to grow slowly, so the mortgage rates will fall, not as fast again as we'd like, maybe 50 to 100 basis points by the end of the year. That would be nice. And then more listings will come online. I'm expecting actually a pretty busy September, October. If we see a couple of rate drops before then, that would be really nice and that will help. So 2024 will continue with modest activity over the summer and perhaps a busy fall, September, October as we head into those months. Now, let's talk about the fun page. Couple things that have come up. One of the big ones is Bill 44. As of July 1st, is officially in effect. That's the BC Multiplex Zoning Initiative. That's where the provincial government has said every municipality in BC that has more than 5,000 people living in it will require their zoning bylaws to permit up to 4 units on a standard residential lot and up to 6 units near public transit. Whoa, that's got a lot of people up in arms. Some municipalities aren't happy with it. Others are expecting it and going along with it. So that's Bill 44. It's officially in place now. So these are all the different scenarios. 3 units, you can build a triplex or a duplex in a house. You can have the duplex in the front and the house in the back. And there's all sorts of a myriad of combinations. On 6 units, you can have a sixplex, or you can go in the middle and go 2 triplexes, or you can go a duplex and a fourplex. It's blah, 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 blah. You can do a whole bunch of different combinations of these on your lots. Now, what does that actually mean for your standard city lot, for example? Well, I looked it up, and 3 units are for lots that are less than 280 square meters. Still doesn't mean much till you convert it to square feet. That's 3,014 square feet. That's a 25-foot lot in Vancouver. So you can build up to 3 homes on 25-foot lots or narrower in Vancouver. And as soon as you're over a 25-foot lot, you can build 4 units. So 4 units on a 33-foot lot, go figure. Triplex and a coach house, or a duplex in the front yard, duplex in the backyard. Now, it also says on that same lot, that same city lot, you can build 6 units if you are near transit. Wow. So I'm thinking, well, what does near transit mean? So I did a bit more research. And transit-oriented areas are those areas within 800 meters of a SkyTrain or 400 meters of I call it a bus loop. They're calling it a bus exchange. So if you're within 400 meters of a bus loop or 800 meters of a SkyTrain station, you can build up to 6 units on a standard city lot. Go figure. Crazy times we're entering in, but it's needed. And the proposed legislation permits 1 secondary suite or a laneway home in all single-family or duplex zoned areas in all communities throughout BC. So this is a major Bill 44 in effect as of July 1st. That's my market update. I really appreciate you joining me. You can watch these videos on YouTube, on Facebook, and on Instagram. And if you're a podcast listener, you can go to the new YouTube music app and listen to this update and all my updates on YouTube, Apple Podcasts, and on Spotify. I'm Marty Pospisil. Thank you very much for joining me, and I look forward to seeing you again next month.